time to talk about your money here on Good Morning Quad Cities. But first, let's take a look at how the stock market is doing this morning. At the end of last week's trading, the S&P 500 was up 0.3%, NASDAQ up a little more than 2%, and the Dow Jones Industrial Average down just slightly by 0.1%. Now, joining us is our financial expert, Mark Gravicheski, as he always does every Monday morning at a new time slot, though, so glad you're with us here this morning. Thanks for being with us.
You know, that extra 30 minutes of sleep, wonderful.
Absolutely worth it for you. It doesn't change anything for us, right? So let's talk, Mark. So far this year, the stock market has really not been kind to investors. In June, benchmark S&P 500 fall about 24%, as you know, all-time high set back in January. Last month, gained 9.1%. So really, do you think this rally is going to continue?
Well, you know, as I've repeatedly stated on this segment before, this is a stock market, Josh, that's going to require patience. Well, we need to remember what caused this sharp 6-month decline. In the first place, it was very high inflation. It was rising interest rates. It was concern on the strength of the U.S. economy. Now, look, without question, this 5-6 week rebound we've seen in the stock market is certainly a welcome sight, but Wall Street still has significant apprehensions over these three issues. When will inflation start to decline? How fast will it start to decline? How much longer will the Federal Reserve continue raising interest rates? On the economy, the big one, we are in this technical recession, but we're expecting even more recessionary concerns to come around 6 to 12 months down the road. And until Wall Street, in my opinion, gets some clarity again on these three key issues, I think Wall Street is going to be very hesitant to push this stock market back up to its all-time high that it set all the way here on January 4th.
So let's also take a look at the labor market as well. On Friday, the Department of Labor released the July employment report, showed we have more than 500,000 new jobs, and unemployment rate fell to 3.5%. What's kind of the latest update here?
Well, you know, this is a labor market. It is one of those parts of the economy that has remained fairly strong. In July, you know, the economy added 528,000 new jobs, you know, well above that 250,000 that Wall Street was expecting. The labor market has now officially recaptured all of those 22 million jobs that were lost during the height of, if everyone remembers, those business closures and mandates all the way back in March and April of 2020. Let's look here at the national unemployment rate, back at 3.5%, again matching that 3.5% pre-pandemic rate we saw in February of 2020. So again, this is a labor market that continues to crank out a steady pace of jobs every month.
So this is some good news for our economy, but what would be some of the weaknesses if you had to pinpoint any right now?
Well, you know, if you do kind of dive into this July employment report a little bit deeper, one of the biggest concerns is that annual wage growth is still not keeping up with inflation. Over the last 12 months, wage growth, you know, has risen by 5.2%. Not bad, but when you consider that inflation, consumer prices have risen by 9.1%. You know, these higher prices, especially in basic everyday necessities such as, you know, food and clothing, housing, and even energy costs are now forcing many Americans to actually start pulling some money from their savings and retirement accounts or to take on more debt. We are seeing this very sharp spike in credit card debt.
And very quickly, what's kind of your outlook here for the rest of the year with the labor market?
Very quickly, you know, I think the labor market is expected to remain fairly strong, but we are starting to see some of these, I guess you could call them cautionary flags. We're seeing a steady rise in the number of people filing for first-time unemployment claims since mid-March. And more big-name companies are starting to either announce layoffs or some type of hiring freeze. And these are some big-name companies, Josh. Think of, you know, Ford Motor Company, Microsoft, Amazon, even Walmart.
Really? Wow, that's fascinating when we see numbers like this.
Again, very solid, but just losing a little bit of its luster over the next 6 months or so.
All right. Mark, thank you as always for being here.
Great to see you. I love the new time.
Thank you. Thank you. I love it too.